Hello everyone. Welcome to this week's weekly market view for Monday, the 9th of October to Friday, the 13th of October 2023. My name is Vishal. Let's get started. With the Nifty chart, let's start with the monthly chart. And this is the October month candle. As we can see that markets are just consolidating here. So nothing very clear on the monthly charts. Let's go on to the weekly chart. And on the weekly chart, we did see a bounce coming out of this level of weekly demand. Prices are still holding on to this level. Let's move on to the daily chart. On the daily chart, last week, as I had mentioned, price did come into this pivot and did give a nice bounce. Then markets went on to rally all the way up here. Were unable to sustain this level of supply, and also, unfortunately, what has been happening on the weekend. Very sad news, but prayers with the families of those who have passed away because of the war situation. Markets are a little uncertain right now. So today we had a gap down on the Nifty, and then we saw a little bit of a pullback. But right now the market is still just dibbly doubling between 19,500 and 19,600. So unless and until the war situation subsides a bit, we might just see a lot of uncertainty coming into the markets, where we'll see a rise in crude oil prices at the same time. If you look at the 75-minute chart, this was also another level that was identified in last week's analysis. And prices came to this level, gave a nice move to the upside. This was a supply zone, and prices did close last week into this area. And today we see a gap down. So more or less, the levels for the coming week are going to be these two key levels, and it's more likely possible that the markets might tend to remain range bound between 19,661 to 735 in the short term to 19,350 to 306. Any break above these levels will probably indicate more bullishness in the market. Any break below the 306 level will probably bring in more bearishness into the market. We also need to be a little careful that just below all this this price action over here, we have a gap level, and prices have never ever visited that level. So in case if the markets do show some kind of bearishness, could be because of the war or could be because of any kind of calamity, then this is the level to watch out for, 19,202 to 19,143 on the Nifty. Okay, let's move on to the next index, which is the Bank Nifty. So we load the Nifty Bank chart here. Let's identify some key levels. Okay, so as compared to the Nifty, the Bank Nifty has been slightly more weaker. As we can also see on the chart, we have created this drop base, and now this seems like this could be a potential drop, but not yet. We are coming in closer to this tested weekly level of demand. Prices give a nice bounce once it revisited the level here. This is the second retracement. If you go on to the daily chart, and if we look at the overall daily price action over here, we can see that this is all a strong level of supply. So any pullback into this level will probably create a little bit of more bearishness into the market. So we have a gap level over here. So this will be a level to watch out for. So we might see the markets trying to retest this level in case all these lows break. So again, very similar to the Nifty, we expect the market to be a little bit range bound now. Either the market will tend to get a little bit of momentum after it breaks these lows, or it will try to remain range bound between 44,595 to 45,000. And on the downside, it's more likely that markets might retest 42,783 to 42,563 on the Bank Nifty. So these are going to be the key levels to watch out for. Let's move on to the next index, which is the Fin Nifty. So let's quickly have a look at those levels. Okay, so as the charts load, perfect. So we have the charts here now. Let's start with the monthly chart first. So on the monthly chart, we are seeing a little bit of a similar formation, just like the Bank Nifty. So selling pressure coming here and then basing could be a possible drop in price here. So we'll have to wait and watch. Let's move on to the weekly chart. On the weekly chart, we are coming into this tested level of demand on the weekly. Currently, Fin Nifty is trading at close to around 19,600 odd levels. But again, we are coming into this tested level of demand. This could give a bounce again, yeah, because still a lot of uncertainty. But what is a little bit disturbing is what we see on the daily chart over here, right? So on the daily chart, we are seeing these these supply zones being created, very similar to the Bank Nifty. And just before 19,103 to 18,997, we see one more level over here, which I'm going to mark again. I had marked this level last week as well, which is going to be this level. So in case of Nifty, Bank Nifty, and uh, Fin Nifty begin to slide down, then more or less we might test 19,285 to 21. Okay. So just keep a close watch in the coming weeks, because it's more likely that these levels may be tested. All right, the next market that we are going to be looking at is the USD INR. So let's go to the USD INR. Okay, on the USD INR, let us see what are we. Okay, so the USD INR, as I said, is giving us clues of where the Nifty is likely to head. And pretty much because of the weekend situation, we can see a little bit of a strong move in the USD INR to the upside, which is going to bring the indices to the downside. Now, what is interesting here is if we go to the intraday chart, right? So I'm just going to remove all the tools here. Right. So we do see this this pro gap level over here, which is this rally-based drop. Right, and we have already tested this level once. So in case if the markets do eventually break this level to the upside, it will be interesting to see what the indices do, because then if the USD INR tends to become stronger, then the indices will tend to become a little weaker, right? If USD INR decides to remain range bound between these areas, then Nifty, Bank Nifty will also try to remain a little bit more bearish to range bound. Okay, so unless and until this level breaks to the upside, there may not be a lot of bearishness coming into the market. So this is just a small clue that we are getting from the USD INR. Unless and until this level breaks, it's highly unlikely to see more bearishness coming into the market. But as I said, that we are going through a different situation right now, which is a war situation. So anything can happen. Okay. All right. On the intraday front, let's look at some key levels here. So nothing great on the intraday front. This is that same supply zone, which is more or less untested right now, but it could be tested. And we do have this gap level of demand that we need to be a little aware of, right? So just keep a close watch on these two levels on the USD INR. All right, let's quickly have a look at the India VIX. So if you look at the VIX chart today, we did see a big spike up, and we are in this supply area now on the VIX. So we have these two key levels of supply, which is 11.87 to 12.05, and then right now we are more or less testing this area, right? So in the morning, we went on to hit this level, and then since then we are slightly edging towards the lowest level. So in case if now the VIX starts to drop, then we might see a little bit of an uptick coming into the indices. But if VIX tends to increase from here and starts moving towards 11.87 to 12.05, then we are going to see a more downside in the indices. All right, so keep a close watch on the India VIX chart. All right, now we are going to analyze the sector for this week, and this week we are going to be looking at the auto sector. Let me just load Nifty Auto here. Let's wait for the charts to load. Let's remove all these tools. Okay, so after the auto sector has made an all-time high, we are seeing a little bit of correction coming in into the auto sector. Now, taking into consideration, if you look at the weekly chart, right, we do have this level of demand, and this is the area where it seems like the prices are pulling towards. Okay, so you have this rally-based rally, and this is another rally-based rally. So, okay, now the area of concern is all this at the top. Okay, so this is your first drop-based drop. This is the retest, and now Tata Motors is, I'm sorry, the Nifty auto sector is slightly in the corrective phase. Okay, however, if the Nifty auto does come into this area of demand, we have to see which are the strong auto stocks which are also coming into the level of demand. So if you analyze, I'm going to bring up one stock here, TVS Motors, and let's open that stock. And you will probably see a little bit of similarity between the TVS motor chart and the Nifty auto chart. Right. So let's go to the TVS motor chart. So on the TVS motor chart, you see this this drop base rally area of demand. Okay. Now, although TVS Motors is still a little further away from price, there is a possibility that if the auto sector corrects and comes into that level of demand, TVS Motors can pull back to this area and continue its trend to the upside. So you can see here that TVS Motors is making an all-time high, and generally when all stocks are making all-time high, they give an opportunity for pullbacks to continue the trend to the upside. So this is what we are expecting to happen on TVS Motors. Let us see if that happens in due course of time. So this was the analysis for this week. I hope you enjoyed the short and sweet analysis. If you do like our analysis, please do mention your valuable comments in the comment section. And definitely we'll look into your comments and we'll try to answer your questions within the comments. And if you're still not a subscriber of Sher Khan Education channel, do hit the subscription button and do share this channel with your friends and family members, and do engage them in watching our videos daily. Take care, everyone. Have a lovely trading week. See you next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.